Alright, let's break down crypto token unlocks, what they are, why they matter, and how they impact your investments. So what exactly are crypto token unlocks? Picture this. When a new crypto project launches, not all of its tokens hit the market at once. Instead, a big chunk is locked up, kept away from trading. These tokens are usually set aside for early investors, the project team, advisors, or foundations, and they're released bit by bit on a schedule. That's called a vesting schedule. The goal? To align everyone's incentives, prevent early dumping, and give the project time to actually grow. But here's the thing. When those tokens finally unlock, they're released into circulation, and sometimes we're talking about huge amounts entering the market at once. So, why is this important? First, let's talk supply and demand. If a bunch of tokens suddenly become available, holders, like seed investors or the team, might want to cash out, especially if prices have already gone up. More tokens for sale means more selling pressure, and that can lead to short-term price drops or a lot of volatility. Smart traders keep a close eye on unlock schedules so they're not caught off guard. Second, there's dilution. When more tokens enter circulation but demand doesn't change, each token could be worth less. So if you're holding tokens hoping they stay scarce, unlocks can affect your investment. Third, unlocks can actually be a sign of project maturity. Sometimes, big unlocks line up with major milestones, like product launches or key roadmap phases. It might show the team's confident in their progress, or it could be the perfect time for early backers to exit and take profits. How a project manages its unlocks really matters. Poor planning can crash prices fast. Let's look at a quick example. Imagine a token with a total supply of 1 billion but only 200 million are currently circulating. If 100 million tokens unlock next month, that's a 50% bump in circulating supply practically overnight. If insiders bought those at just 1 cent each, and now the token is trading at $1, that's a massive gain. They have every reason to sell, and that kind of sell-off can tank the price. So, how do you stay ahead of this? I use sites like tokenunlocks.app or Masari.io to track upcoming unlocks. See who's getting tokens, and check the exact dates. Project white papers and vesting dashboards are also super helpful for doing your homework. Here's a quick summary. Unlocks can cause price drops thanks to more supply, early investors selling adds volatility, and the project's unlock strategy tells you a lot about its health. And with predictable schedules, traders can plan ahead. Final thoughts. Token unlocks aren't always a bad thing, but they are crucial to understand. Teams that are open and transparent can actually use unlocks to fuel healthy growth, but big, unexpected unlocks without new demand usually mean prices fall. So always check vesting schedules before you invest, especially if you're thinking long-term. And if you want a visual breakdown or a token unlock calendar template, let me know. I can make that for you too.